Hi, I'm Rocky Dickerson with Realty One Group. It's time to take a brief look at the housing forecast for the second quarter of 2022. Now, there have been a number of headlines that are going to have an effect on the values and the sales of real estate in 2022. The war in Ukraine, inflation accelerating at near record pace, skyrocketing price of gas and groceries, foreclosures more than doubled from the last year, and interest rates raising monthly payments by over 15% in just the last 4 months. So, when is the real estate market crashing? What can be done about foreclosures? And how will this affect the value of your house? We will take a look at all of these issues here. Now, first, remember this: in what people call good markets and what people call bad markets, there are always people making a profit. So the bottom line is this: there's no such thing as a bad market, only bad strategies. If you're buying or selling, make sure that you're using an agent that has experienced bad markets as well as good. Now, let's see what the second quarter has in store for the real estate market. First, let's take a look at interest rates. In December, there were interest rates around 2.8 or 2.9% available. By March, those same rates had risen to 4.1%, and that was before the Fed raised its rates. Now for the worst news. The White House just announced that their budget projections were based upon what they saw last November. That was before the record high inflation, before the Ukraine war. In other words, their projections are way off. So don't be surprised if we end up seeing many more rate hikes than the Fed has been telling us about so far. The next thing to take a look at are foreclosures. Many of us remember the horrors of the short sales and foreclosures plummeting house values back in 2010 to 2012. In February 2022, the number of foreclosure filings was up over 125% from just 1 year ago. Now, part of the reason is because there were a number of laws that prevented foreclosure filings in February 2021 due to the COVID pandemic. But there's more good news. Most homes in the U.S. have appreciated over 25% in the last 2 years. So if someone's behind on their mortgage payments, they can afford to sell. After all, if you paid, say, a 7% commission and another, say, 4% closing costs, that still leaves the vast majority of homeowners plenty of money to pay off their mortgage and move into a completely different home. The next thing we're going to take a look at is what we're starting to see in the trend of a reduced demand. One new factor affecting 2022 here. With the new home builders pulling out all the stops to build new housing tracts in 2021, and with people rushing to buy homes as soon as possible last year, it would be highly natural for demand to be reduced somewhat in 2022. In looking at demand, we must study where our buyer demand comes from. In our area, we see a huge influx of buyers from California. In looking at the California market, we see that in February, prices rose from the year before, but at a lower pace than they had been 6 months ago. The big key is that the number of homes selling has decreased by as much as 6% to 25%, depending upon the area. Fewer homes selling means fewer buyers coming to our region. Don't be surprised if you see it taking 3 to 5 months to sell a home by the end of the year compared to 3 to 5 days to sell a home just last year. Inflation is going to have a key part in 2022. At such a record pace that we're seeing right now on things like gasoline and groceries, like it hasn't been seen in decades. The last time inflation was this high, interest rates were well into the double digits. However, more than affecting the monthly payments on housing, inflation reduces the amount of money a family can place into savings for down payment, or even for expenses like home maintenance. This will have an effect by the end of the year as well. What the experts are overlooking, though, is that they predicted an immediate real estate crash in Las Vegas simply because of our appreciation. What they forgot is that Las Vegas was affected far worse in the 2007 to 2012 recession, and housing prices basically have just made up for the losses incurred during those years. After all, cities like Las Vegas lost twice as much from their real estate values back then than the average cities in the U.S. In addition, the majority of new residents to our area come from cities with even higher median sales prices in their real estate. So from that perspective, we're still a value. Take in consideration other factors such as the lack of any state income taxes and how our state makes it easier for businesses to prosper, and you'll see why our real estate can be seen as a steal. In summary, interest rates are rising and many raises are still to come. This may thin down the number of buyers in the area for the second half of 2022, so now may be the very best time to sell. While foreclosures make great ratings and clickbait, the recent appreciation really means the vast majority of homeowners can easily afford to sell and still pull money out as a profit. We are seeing a reduced demand from the areas that brought us the most new residents in the last couple of years, and that warrants our attention in the next several months to see how many fewer buyers may be moving here. If we lose many more buyers, the time to sell a home may increase to 5 months or even more. Inflation will be a factor affecting how much home a buyer can purchase. This could also lead to a condominium boom as lower priced properties become a hotter sale. The so-called experts on the media may wish to get big ratings by spreading messages of panic. So before you lose sleep over the latest headlines, call a local real estate expert to see what all this means for you and your real estate portfolio. Call me at 702-743-7625 or email me, Rocky@RockySellsVegas.com.